5th of May 2023, Thursday, MAO with Cal. Now, guys, this caption must have blown your mind away, right? Because in fundamental, we expect that only a higher cost of the crude oil can break the stock market. But actually, you're wrong. In fact, if the US crude breaks down, goes below $50, this whole stock market will sell. And I'll show you the reason for that, and you'll be mind-blowing. So this is a must-watch video, guys. Send your friends, let them take a look. They will love it, and they'll thank you for that. All right, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. All right, so first of all, let's talk about Apple first. Now, Apple, this share yesterday broke down below my trend line. Can you see that? It's pretty clear that it broke below my trend line. Okay, I'll bring it to you. But the way it closed was magnificent. Really, it closed exactly on my trend line. This is how boys manipulate this game. And look at the huge volume there. The volume was big, right? Indicator-wise, we have the RSI and the moving average turning downwards. But of course, when the result came out, we can see that Tim Cook is very happy because Apple reported better than expected quarter driven by iPhone sales. But if you actually look carefully into the earnings, you will notice that it's because Wall Street soft expectation. That means that they reduce it to the point that it's so low that it should be able to match it, okay? And of course, the main thing is Apple overall sales dropped for the second quarter in a row. This is the key point. So to Apple, Tim Cook, the CEO, obviously he said that it's a good quarter, right? But we all know that this is not really showing the thing. But of course, the stock market has also have different views right now. The post market is up by $4 or almost 2.5% at 169. So at 169 is somewhere pretty near to our resistance at 171. So I repeat to you guys, if you want to sell Apple, I think at 171 will be a good price to sell some Apple. Okay. All right. Think about this. Yeah. Okay. Continue. All right, so let's recap what happened last night. So last night, the Dow went down by 286 points, NASDAQ down by 47, and S&P down by 29. So that means S&P goes back down below the 4090 mark. Now, I look at the heat map. I don't really see any significant movement. All right, I mean, Apple is down by 1%, and maybe Google and Meta down by 1.4 to 0.6, but really nothing much in the market. All right, so it's more like a selling across the board, right? Don't you think so? All right, so from CNBC, apparently, right, it is all the earnings on the iPhone right now, and the main thing is that the average is also tracking for a week losses. If the market stays down, then of course this week will be down for the entire week, yeah, and of course that is because of the FOMC result. Now, JP Morgan chief US equity strategist, right, Lacoste came in and says that, right, the current situation now is this: it's not clear what Jerome Powell threshold is for the raising of rates, despite that there could be a risk of recession. But the thing is that, well, the market doesn't seem to feel that way. So all I can say is this: everybody now is watching and see whether the Federal Reserve will continue to raise rate. But as I mentioned to you yesterday, most of the Wall Street guys expect there'll be rate pause in the next meeting in June. So all we have to watch out is tonight, there'll be non-farm payroll coming out tonight, and the market is looking at 180,000 jobs. So if the jobs do decline, of course, by right, that will give Federal Reserve something to take a look. But of course, if the number comes stronger, that means that there's a lot of room to continue to rate hike. So what do you think? Now, to me, is that I think the number will come off something around 180 to 170, and the market will have initial happiness, but then after that they realize that, hey, recession is on the card. I'll tell you more about this because I'm seeing the crude oil chart, right? I'm very, very very, very sure that something big is going to happen very soon. So let's go back again. On the 5th of May, yesterday, right, there's coverage on the crude oil, and crude oil extended downward because of the FOMC meeting, and crude oil plunged by 4%. All right, the thing is this: we all know that the US dollar was supposed to go up because of the rate hike. But the thing is this: after the rate hike, right, the US dollar continued to fall. That is something very, very unlikely. And the thing is that if the US dollar is falling, by right, it will always have a inverse impact on crude oil, which means that if the dollar actually slides down, then crude oil should go higher, right? But the thing is this: crude oil also went down. So what could be the only reason for that? I've been thinking through, and of course, the big thing is a big R, is recession, which means that now everybody thinks that there will be a recession coming in. Why? Because only when recession, right, the need for crude oil, the need for energy will go down. This is something that you will be stunned. So what we check is that the US Strategic Petroleum Reserve inventory, I take a look itself to see whether is it because that Biden is releasing more crude oil that causes oil to go down. But interestingly, no, that's the answer. It stays at 364.9. Of course, this is the updated on 28th of April. I double check again on the Google, and the number is still the same. 36.94, and it's 28th of April. So we have the same numbers over here. And of course, you look at the chart, it is the same. There is not that a little bit more decline, a little bit more, but it shouldn't be enough to bring down a 4% drop. So which means that right now, right, I just got a feeling right now that probably the White House, why until to date, they still refuse to do any buyback because they likely know that the crude oil price will go lower. That's the reason why they're holding back. And that's why the whole thing is now is pretty clear. So even like recently when the OPEC Plus basically knocked off the supply, right, the crude oil jumped up initially. But after a few days later, right, you notice the crude oil just came back down again. So that means that actually, right, something is very big is brewing at the back. And this thing itself, right, in my opinion, is recession. So you look across the board right now, right? Now there is the oil price is coming down because now people are watching a potential recession. So you see across the board now, everyone is talking about the same thing. Now, of course, you will say, Cal, if everybody say the same thing, most likely it will not happen. Now, I can tell you this, guys, for other things, probably, but for crude oil and recession, they have a very interesting relationship. And I'll tell you with all the charts, and you will be stunned by the end of the day. All right. So let's take a look, right? So first of all, this is crude oil using the 200-day moving average. Now, take a look. This is very important. Yeah. First of all, the last time when you see this was back in 2002, 2003, where crude oil touches the moving average MA30, and that was where it gets supported, and then crude oil shoot up. Quite cool, right? Then after that, in 2008, we have the similar thing happen. Bang, crude oil goes up. Okay, pretty cool. But once it basically goes down, okay, once it had to go down, right, you can see that's the end. Once it closed below and there's no reprieve, ooh, the crude oil really slammed. Right, it happened again, slammed down. Okay, so if it stays above, multiple upside. Okay, so pretty cool. So now where are we? Oh dear, we are actually now below. We are actually trading below the moving average on the monthly chart. This is not a good sign. I say again, if this month ends with this Dow closing, we may actually see crude oil going down to $50. I think that's the reason why Biden and friends, they actually know this. They know that Federal Reserve had an increased interest rate. They know that that will push recession to come in. That's why you can see Jerome Powell was basically informing everybody that if there's going to be a recession, it may be a mild one. So that means that he knows that this is going to happen. And because of that, right, the demand for crude oil will not be needed. So that will push down prices of oil going lower. And that will piss off the OPEC Plus. And that's probably the reason why they decided to cut the supply. That means that the Americans are much smarter in a way. They know exactly what could happen very, very soon. And of course, if all these things happen, what will happen to the stock market? You cannot imagine that. Let me show you now. This is the crude oil in candlesticks versus the Dow Jones. Now take a look. This is very interesting relationship. You see, when the crude oil goes up, right, in a parabolic front, you can see that the stock market also goes up. Very interesting. And when the crude oil price plunge, you expect that the stock market will go to the sky, right? Because they're being lower cost. I'm so sorry. The stock market also plunged. Pretty cool. Try again. This is the crude oil price going up. This is the stock market going up. Incredible. When the crude oil started to go down, the stock market itself also came down. Of course, this magnitude was not significant, but it still came down. And then the thing back here again, where the crude oil goes up, what happened? You can see that the stock market and the crude oil basically follow tracks. This is really incredible. And of course, most recent is that when the crude oil price shoot up, the stock market also follow. And most thing is that now you can see the same thing happening again, that the crude oil price, the stock market goes down and the crude oil price goes down. So you see there's no relevance here. So what I'm trying to say is this, guys, is that the stock market and the crude oil has a very interesting direct relationship. That means that, right, if the stock market is going to go up or go down, right, just track the crude oil price. The crude oil price will tell you what will happen. And of course, you can see from the fundamental where we are taught in our schools, it doesn't make sense because we are taught that higher costs will bring down the stock market. But you can see it doesn't. And I've been saying this for the longest of time already. All right, now let's just look at if we combine this with recession. Now, what I did was that I basically put recession, okay, the period of recession into crude oil. I can tell you this is amazing. During the last four recession, right, since 1989, right, you can see right now, right, during the recession, we can see crude oil price going up, all right? And then at the middle ground of the recession, you can see that that is where the crude oil plunge. Can you see that? Okay, listening again, throughout that, the price goes up into recession and then the crude oil plunge. Same thing again, the crude oil goes up to the middle of the recession, then it plunged. So what I'm trying to say is this is repeating and repeating. Every time when there's a recession, the crude oil price will move up towards that point, and then after that, when the recession kicks in, right, you can see that the demand for oil is no longer there because everybody is tightening, right? So if everybody tightening itself, that's the reason why the crude oil price plunged during recession. You understand? Pretty clear, right? So if that's the case itself, right, where are we right now? The crude oil have already came down, right? But the thing is this, we are not even near a recession. So what do you expect? Crude oil to shoot up or crude oil to plunge further? That is something that you may want to consider right now. Something is not going in line. So now let's take a look at this. We combine this right now with the crude oil price, with the Dow Jones and the RSI, followed by the Dow Jones movement, right? Dow Jones, crude oil, RSI, and recession. Wow, this is crazy, guys. We all know that during recession period, the stock market fall. Can you see that? Recession period, stock market fall. During the recession period, stock market fall. So that is pretty normal, right? When we're recession, the stock market fall. So we have 3 waves of recession whereby the stock market fell. And of course, going back to what you share, you right, the indicate shows that when crude oil is at the high itself, right? That is where also where the stock market will come down, right? So the thing is this, now the stock market is kind of high, but the crude oil price is coming down. So what if, okay, there's going to be a recession coming in? Think about this. All right. Then what will happen? The crude oil price will go down further, right? And because of what we saw earlier, when the crude oil price goes down, the stock market also go down. That means that, right, we will have the same pattern that we've seen in 2000, 2008, 2014, 2018. It's the same thing. It repeats. So which means that if crude oil price really come down to $50 to $40, sorry guys, the stock market wouldn't be going up. It will be coming down. And when that all happens, it's all right. It will be panic across the board because that means that a full-fledged official recession is coming in. So the question is this now, is it the time to short crude oil, right? Well, before you jump into it, I did a very simple Fibonacci for you, and it's amazing. Now, this is point A. This is point B, the recent low and recent high back in May 2019. So if you do a simple Fibonacci, you will notice it's incredible. When the market hit this point here itself, the Fibonacci at 23.6, it actually stays as support and we rebounded. But once it loses it itself, right, the market will come down to the next number. And the number is 38.2 at about $80. That's amazing. And then after that, it bounces around. But the scary part is this. The market bounces quite a fair bit during about this $80, but when it breaks down, right, you can see it goes down perfectly to the 50% mark, which is $64. The question is this, recently, the crude oil also came down to $64. Okay, so now this is a very important point. Now the crude oil is at $69. For those who are bullish, you can buy towards $80 because that is what the chart says. If the market can stay above the Fibonacci 50%, $80 will be the first marker. All right. Then, of course, if the crude oil goes up, right, you say, Cal, that means you're wrong. No, because now the thing is this, the market now doesn't want high inflation. They want the crude oil price to be down so that inflation will be low. That's what they want. But if let's say the crude oil goes up by itself, then that will add more pressure to the interest rate environment, meaning that, right, the stock market will be pressured. So it's like a checkmate thingy. Now, that is for positiveness. Now, what if the crude oil actually really goes down because there's a recession coming in and the people who are smarter, who have the money and resources know that? Then that means that they will know that crude oil will plunge, right? So the thing is this, the crude oil has been staying afloat at $64.71 for 2 periods. All right, that means you can see what the chart here is, all right, for 2 periods. Okay, the crude oil come down to $64 perfectly and then rebound both times. So if those are bullish, they will say they will go back to $80, right? Now, the question is this, what if it doesn't go up? What if the recession is coming in as I predict? I say that, right, by May and June, the selling will start to kick in. And if it really happened, gosh, the next target itself is $50, which is the 61.8 at $50. Now, that means that crude oil can actually goes down to $50. Now, at this junction here, you see, then that will resolve the inflation problem, right? Well, again, you are right, but based on the chart and history, we actually see that the stock market will come down because the company like ExxonMobil, like all those crude oil inventories companies, they will all be affected. You got my point. And because the only reason why to sell crude oil now is because you know that the recession is coming in. You don't want to hold onto this. You're doing it right now. So that's the reason why now I understand why OPEC Plus did that supply thingy, but still the market keep on coming down. And if it's not if not Biden and friends letting go the crude oil, then I can tell you this, guys, the smart people knows that something big is going to happen. And that means that a recession is very near, very, very near. All right. So let me know your comment. Let me know your views. I'd like to see you guys telling me the different view if you want to. Guys, Cal signing off. Have a great day. Bye-bye.